Hello and welcome. We are looking at a outside day, as they would refer to it in technical analysis, in today's chart on code KMD Komodo. Outside day referring to a day where the high is higher than the previous one, and especially when it's significantly, it counts well. And by far, these are both significantly noticeable. Also, a lower low from the previous day as well. Hello, my name is Derek, and welcome to this video, a Komodo technical analysis video. A very, very wild day, to say the least. And on the TradingView site, I can't see an outside day. I can see an outside double day. So I'll show you what I mean. Let's bring that chart up right now. And that's because the price has actually been down to 55. That's what it should look like. Something like that. Because on the intraday movement, as far as the other side, we'll get to that in a second, but we can see 55 is one of the areas in which it resisted. So it's now once came back to where it came from. And the reason for this would be because TradingView's site is having technical difficulties right now, so it doesn't have the most recent data. And the price action right now is in at 68. I bought at 65 about 5 minutes before doing this, just as an intraday trade, trying to sell at 72. But it's got a good technical form showing. And this is a chart that I was going to show you. I wanted to re-show that daily chart, but this is what the intraday charts. I'm going to get that into that in a second, but I want to go back over the daily charts. Let me bring that back on the screen. And I want to talk about some interesting mathematical Fibonacci analysis. So before I do that, let me just see how good of a line drawer I am. Yeah, that'll work. So that's more like what it's looking like for today's session. So let's bring up some Fibonacci analysis. Let's make this a much smaller size screen. And if you're wondering about this, I made this program on a small basic program. And if you're interested, let me know. I can give you a link to information on getting this. Alrighty, so then we have a high of 106 in here. And a multiple hit low of about 28.5, about 6,122 times it hit it. Well, I'm just putting it a large sarcastic number to get the point. It was a major support mark. So the semi first level up was the 38,000 level, which was resistance short term. Yep. And then an okay level at 47.2. 47.2. It was resisted here. It was also resisted. So it's been resisted twice here. And then the third time, at least on the daily time frame, it blew past it and then supported it the next 2 days. And now we enter the 64. So the 47 and 64, these are the bigger numbers. So 65,000 even, which is where it's at now. And I'll bring that number up in a bit, but I don't need to draw a line because the red line is already there. And within this the situation here, you've had the key Fibonacci level with price chopping above and below it, and most recently above it. Well, you can see even originally it came back down after an immediate hit to it. We can see that it's hopped on this day, came back to a decent decline to where it came from. And then the next time it broke above it, we can see on this day how it supported it. So before I move on to the shorter term time frame, showing like the 4-hour chart most likely, or the 2-hour, whichever one gets the, well, shows the market pretty much since this point in here. is we'll talk about the 76.4% and the upside number, because usually if you're going to pierce above it, you would think, oh, 76.4 is somewhere around 85, because that's just where it usually happens to be. Well, it's at 78, so it pierced above it. But if you look at 78, it was a much larger number than 85 was. It was a pretty much perfect resistance in here. And if you're finding support at an area where you can usually find resistance, which is the 61.8% level like this, then that can be very bullish. Again, this is a cattail. I'm just bringing the old chart in, or just pasted the version to get rid of the paint of my drawings on it. So anyway, when I see a move like this usually signifies to me that there's going to be a decent size move one way or another when you have an outside day like this, which indicates either it's going to work towards making a big move in here, and sometimes immediately, sometimes with just sideways correction, and maybe of course with the pullback. It can also mean that this could be a significant top that we see as a top that's never seen again, or a top not seen for quite some time. It can work in multiple levels, but usually it works within the trend. So more times than not, if I were to have to guess because of it, well, what's the path of least resistance? What looks like the most probable situation? And in here, it looks like going higher would be in such the case. So let's look at this now on a shorter term time frame. And for such, I'm going to use the charts on Komodo. I'm not going to put the 18 averages in because I'm going to go mainly on how price movement's been going. But because this one can show the story a lot better, I have no idea what this volume happens to represent, but that is definitely of note. Of course, a lot's been going on today within the Bitcoin market, and then news in China, whether it's real news or fake news. It wouldn't surprise me either way within this way this world is right now. But we can see the outside day clearly, because where's the key resistance? Well, originally you had key resistance in here and up in here. But most certainly 80 was boom, boom, boom. So it managed to barely get above it, so that represents where the higher high would be. And you could even say failed breakout, fast move to the downside has already occurred as well. We can even see further that when you have this move in here, you come down. At this point, that was already a big fall as it was. And then back to where you came from. And a lower low. After the last one was already huge before. And then, of course, going from 55 right now up to 67. That's a 12-point basis turn. That's over 20%. So when you're looking at things like day trading, let's shorten this out some more. This is a 1 hour time frame. Let's put like the 1 or 5 minute time frame up. And this is it right here, showing the move down to 55 at around a quarter after 12 Eastern time. And I often get asked questions like, what time frames are you trading on? And well, it's a difficult question to answer. I think the easiest one is multiple time frames, really, especially when you look at my videos. I go hourly chart, daily chart, weekly chart. I'll go through every single one. That's pretty much what I was learned from the start, is trading on multiple time frames. And I went with I learned from Brian Shannon from alphatrends.net from doing these videos like I do back like 2007, 2008. And then he wrote a book. I never did buy it, but it was on a technical analysis with multiple time frames is what he called it. But I think it's just really important when you put the time frames together like that. And then another way of answering it is I'm really a long-term trader for the most part. There's different situations I look for, but it's not really what time frame you're looking for, but what kind of percentage moves are you looking for? Because I can show you this chart. This could be a duration of 2 years of a stock, or a year even. This could be a year. This could be a 12-month chart where a stock goes from $85 down to $55, and now it's at $69. And this is just a span of a few hours, and that's it. Just a few hours. We can see at 9:30, 10 o'clock in the morning, it starts its fall, and then now that we're approaching the 1400 hour mark, Again, not long at all. So then, I've talked before about my strategy several times that I use where you could just do this blindly for the most part. You just buy low and sell high. And when you're in this situation in here, you should already have your sell orders in place. And obviously, they're not going to hit coming in. But you'd have buy orders. Let's assume you have your buy orders all over here. So it got hit. So you place a sell order. And then this one gets hit. So you place, say, a buy order here. This one gets hit. You place a buy order. This one gets hit, or you place a sell order rather. This one gets hit, so maybe you put another sell order here. So now all of these buy orders got hit. Now you've had two sell orders get hit here. So maybe you're like, okay, I sold this. I'm going to buy this back at previous low, say. And then this one, maybe you end up buying this back again. Okay, so now you buy this. Let's put a sell order in, maybe around here. Okay, so I'm going to sell it. Let's maybe buy it back somewhere around here. This sell order gets hit from before, so we put maybe a buy order back in here. This sell order gets hit in here, so maybe put a buy order back. Let's say we get lucky and get this one in here. Oh, so you buy here, you put your sell order in, say in here. Okay, or sell order, then you buy it back in here. So now you got your buy order here. Maybe you get your sell order here. This buy order we can see missed. Oh, that's going to happen. Oh, that's going to happen. Although technically, if you sold here, you'd probably put a buy order somewhere around here. Maybe sell it back. That hasn't sold yet to this time. But this sell order, if you didn't do anything with it, would have hit here. See, this is why usually if I miss a sell order, I want to do one of two things. I either want to sell it up above, just a bit above, which you can see would have hit here. Or I want to sell it well below. This buy order would have hit here. All of these would have hit. Every single one of these would have hit. So as far as this is concerned, you would have definitely sold. You should have sold your bottom two buys in here by now with this rally. And you should have at least bought at least one of the two that you sold in here. And then of the one that you bought here, you should have sold again up there with the buy order probably down here. That's my basic strategy. So when you get situations with markets that normally when you make these plays, you hardly get orders at all. Oh, you get a notification, buy order or sell order filled, whatever. It's been 4 or 5 days since the last movement. But then all of a sudden these markets go haywire, out of control. And these are the ones, if you're looking for day trading, you could do it. Those are, if you're looking for traditional trading, these are the ones to focus. And if you ever have situations where your codes that you're playing, maybe you got like 30, 40 of them, and then the ones that are wild because you see it, they're the ones you're going to put your primary attention to towards the day because they're the ones that can make you money for it. But I just wanted to go over that. Thank you for tuning in. Anything, of course, in which you do is based on your own risk, own reward. I'm providing information as I see it, as I do it. And yes, your own risk, own reward. There's a lot of profits to be had in this, as I've shown, of course, with this example. Take care.